5 money tips, managing your credit score. What affects your credit score? Although judgments, liens, and bankruptcies can have a damaging effect on your score, it is the little things that count. In fact, 65% of your FICO score is based on 2 key factors: your payment history and the amount of debt you carry versus the amount available to you. Also important are your length of credit history, how much new credit you have applied for, and your mix among credit types. Tip 1. Get your score. Although you can get free credit reports once every 12 months through www.annualcreditreport.com, the report does not include your score. You get a score only if you have been denied credit or insurance. Many lenders will provide your score upon request after your application has been approved. If you want to know your score before applying, you can pay a small fee to one of the credit reporting agencies or go to www.myfico.com. Offers for free scores are usually tied to monthly credit monitoring services. Tip 2. Correct your information. It is a good idea to check your credit reports annually to ensure that they are accurate. Correct mistakes immediately with both the institution and the credit reporting agencies. Be sure to send copies of supporting documentation and keep a record of your request. Tip 3. Understanding your rating. FICO scores range from 300 to 850, with 850 being the best possible score. Generally, a FICO score above 700 is good. Score below 600 indicates a high credit risk. Tip 4. Know how to improve your score. Pay bills on time. Pay down credit card balances. Reduce the credit card balances you carry to below 35% of your available credit limit. 10% is ideal. Cut up unnecessary cards, but don't close the accounts. Because your utilization rate counts as 30% of your FICO score, don't reduce your available credit by closing old accounts. Instead, train yourself not to carry unnecessary cards or cut them up. Remember that the trend is your friend. As your credit blips recede into the past, your new habits have more weight. Tip 5. Avoid debt negotiation companies. Don't be taken in by ads by companies that offer to get you out of debt by negotiating with creditors. You may get a reduction in your credit balance, but not without paying high price. Moreover, if the company encourages you to walk away from your debt, you will also likely damage your credit score and wind up paying additional taxes. You don't need a third party to work out a modified repayment plan. Call the number on the back of your credit card, explain your situation, and ask to restructure your payments. I hope you enjoyed this video. As always, we're here to help.